Hello traders and welcome to my video on ICT Killzones. So what are ICT Killzones? Basically it's a fancy name for trading hours which have the most volatility. It does depend on the currency pair that you are trading, but we'll get to that in a minute. First of all, I've used an ICT Killzones indicator to mark the kill zones here on the chart. I've color coded them accordingly. So the kill zones basically are the opening of each market session around the world, or the few hours following on from the opening. So we have the Asian session, the New York session, and the London session. Basically, the principle behind it is that trading activity tends to be higher around the opening hours of each session, something that I've noticed for many years now. It does depend what currency pair you are trading. For example, if you're looking at the Asian Killzone, which is the green one here on the chart, you're going to see more of an impact on yen pairs, Australian dollar pairs. Whereas when you are looking at the London session kill zone, which I've marked here on pink on the chart, pairs with the British pound are going to have more of more volatility around the opening here of the London session. And then finally the New York opening pairs with the dollar, US dollar, of course, are going to have more of an impact, usually around this time. When the New York opens, it does coincide with the London session. There's a slight crossover there, so you do find that pound and dollar base pairs will have more volatility. This is a pound dollar 15-minute chart, so you're going to find usually more volatility around the London session and the New York session, especially during the opening. Okay, so ICT kill zones, I mark them as 2 hours on the chart. They open in 2 hours. I just find these to be the most active. It's worth mentioning that this is perhaps better for trend trading, just because the volatility can cause bigger market movements. If you are trading a ranging strategy, when you're going to try and pick tops and bottoms in a consolidation or market range, then you might want to focus on trading outside of the kill zones if you're trading pairs that are coming under that trading session. Okay. So, for example, during the Asian session, if you were looking to scalp and trade reversals within a range, you might want to look at a pair that's not affected, well, not as affected by the Asian session. Perhaps the Euro pound, for example, would tend to have less volatility, which may be good for a ranging strategy during that time. You probably wouldn't want to be trading the, the guppy, the pound and the yen around the opening of the Asian session if you're trading ranging strategy, because it could just be too volatile. So yeah, it just basically marks on your chart trading sessions, really. Then it's up to you how you want to trade. If we just take this as an example, as I said, this is a pound dollar chart, so we're going to look to, let's say, trend trade, because it's going to be volatile. The market, we're saying around these ICT kill zones, aka the opening few hours of the session. And you can see right away here, this is where the opening of the London session was, and there's this big candle, bearish candle, which if you were, I don't know, you're having your coffee and your breakfast around here, you're watching your charts, you're waiting for the kill zone, aka the opening of the London session, it's just a fancy name for it. You could have marked your support level here on the chart. You can see this level of support has been tested multiple times. Then you have resistance up here. Okay, and that would have been an opportunity you may have been watching. So you have a breakout, the London breakout. It's quite a popular, well-known strategy to trade a breakout of the range prior to the London Open. So the Asian range, which is what we've marked off there. The Asian Open is this green one, remember, which is, Tokyo and Sydney around similar times here. Okay, so you would have been here maybe at your charts, waiting to see what's going to happen. You could have had a pending order below here, anticipating that, okay, the market is perhaps making lower highs. We'll have a inverted hammer candlestick pattern there. We have a hanging man candlestick pattern there. Arguably too, there's bearish candlestick formations. I mean, if you were awake then, you may have been looking to take that as an entry into this particular downwards trend. That being said, we're focused on the ICT Killzones. So you could have taken the breakout here bang on the opening of the London session, and it would have been a good entry into the trade. Had you missed out on the action, you still would have had ample opportunity to enter within the kill zone. I mean, this candlestick pattern here, pin bar, would have been a good indication to perhaps take the short trade. Then you know that there should be plenty of volatility for the move to have more gas in the tank. As you can see, it had plenty throughout the course of the day. The price did drop significantly all the way from the London Open to the end of play, over 100 pips. So that would have been that particular kill zone there. You could have in fact just marked that support level after the breakouts happened. Let's just say you missed it, you waited for a pullback, and then you got in on the second breakout there. I mean, there's even a rising wedge pattern there. That does fall outside the ICT kill zone, but if you're day trading, there is other opportunities to enter in on this move. We haven't even looked at technical indicators, which of course can be used to time entry into a trend. Perhaps the stochastic is not the best example in this instance, as on the stochastics you ideally look to enter a sell trade when price is in or around the overbought zone of 80 and above. Or to be fair to the indicator, as I said earlier on that trade there, if you were watching the candlestick patterns and the lower highs, the stochastic would have been a confirmation that perhaps that was a good point to enter this particular trade. A crossover downwards as well on the stochastic does suggest a bearish market, and there is a crossover there which coincides with the breakout on the London Open, and another crossover there, albeit closer to the oversold zone than the overbought. But still could have been used for confirmation. Do have divergence on the stochastic to the downside as well. This is a 15-minute chart. I do find technical indicators, even price action analysis, tends to be more reliable on the higher chart timeframes. But you can use indicators to help confirm your trades if you want. There are instances where they will keep you out of trouble. Okay, and then if we move on to so if you're here, you will be looking at the ICT Killzone of the New York Open around here. And again, the same principle applies. We're looking for more volatility. We're using a pair with the dollar. in fact the pound and the dollar. So the London session is coinciding with the New York Open around here. So we expect more volatility than usual. And that is what we get. We could have marked wedge pattern there in a downtrend. You can see this level of support here holding up, tested, and hence a big breakout trade there. Just goes to show the volatility. There would have been, you'd have traders in London, traders in New York, well, not necessarily just London and New York, but England, America, watching this pair, drawing the ICT Killzone, aka the open of the New York session. And the volatility is high, so we get a big move downwards on the breakout to the downside. We know we're in a downtrend. We can see that just looking at the chart. You can put fancy trend lines on there if you want. You can use an indicator to help you see that. And let's just put a MACD. No, doesn't want to do that. Okay, we'll just use a moving average. A moving average shows you that we are in a downtrend, not necessarily that you would need one, but you can clearly see we're moving in a downwards direction. Price is below. Can wait for a pullback. That's the good thing about this ICT Killzone. We are having a pullback towards the MA. So it's usually a good time to look to enter on a trade during a pullback. For stop loss, okay, I'm just gonna move we'll leave the MA actually, I think. For stop loss, you can use previous high. Let's just say you did take that breakout there during the ICT Killzone. You could have put your stop loss above the level of support here that became resistance. So you're looking at around 10 pips, which is probably as tight as you're going to get your stop loss when you consider spreads, commissions, slippage. Even you don't want to get taken out with a spike from your broker. When you consider the move went down 80 odd pips, it still gives you a really good risk to reward ratio, plenty of opportunity to take profit, lock in the trade at break even or more on the way down. So yeah, basically this is just my way of interpreting the ICT kill zones. There's probably thousands of different ways you can. I just break it down to the simplicity of you're looking for market volatility around the opening of markets. So for me, that's a trend trading strategy straight away. So I'm looking for a trend. I'm looking at support and resistance, candlestick patterns to help time the entry and confirm trades, and then breakouts. As I said, you've got the Asian session breakout during the London Open, and then when there's more traders on both sides of the Atlantic here, in this New York ICT kill zone, even more volatility, so we get a nice move downwards. Okay, so basically the ICT kill zones are very good to be aware of. I mean, you should be aware of what trading sessions you are trading in anyway. If you prefer less volatility, you want to trade currency pairs that are not impacted as much during the trading session that you are in. You can get indicators which will mark complete sessions on your charts. You can also change the hours on the ICT kill zones so that they cover the whole trading session. If you just want to be aware, just keep in mind that action does usually slow down towards the close of play. Hence why we've marked the first 2 hours of the openings on the chart here, because that's when we expect most action, and that was evident through these breakout trades on this downtrend. As always, make sure you've got good money management in place. I like to cut my losing trades short and let winning trades run to try and maximize each move with a trailing stop, as I mentioned earlier about when price moves down here. Say you entered on this breakout of the opening of the London session. As price was falling and price was around here, you may have moved your stop loss just above this level of resistance. As price fell more down here, could have moved your stop loss here above this level of resistance. Fell even further, you might have put it here. and then you can see when it crosses above the MA if you can get out, if we hadn't already fallen on from this spinning top candlestick pattern. Okay, and this hanging man, is that a hanging man candlestick pattern there, or shooting star, whatever you want to call it. No, that would be the other way around. That's an inverted hammer. Anyway, there's many different ways you can interpret and trade the ICT kill zones. Do what works best for you. What works for one person won't always work for someone else. One thing I wouldn't be looking to do is to take buy trades on this move downwards. Okay, well, hopefully you found something useful in this video. Perhaps it's just worth mentioning before we go that what I was saying about using the kill zones to trade in trending markets. If you were range trading the pound dollar, which this is, if you look at the opening of the Asian session around here, even as the Asian session continued and prior to it as well, because that would have been towards the close of the NY, you can see it does range more, because this session you're more like yen and Australian dollar pairs are going to be affected. So you could have been, trying to you could have bought there, sold there, bought there, whether you're using a stochastic oscillator, CCI, or another indicator to try and trade reversals on this let's say quieter pound dollar period. This is a 15-minute chart. You can go down to the 5-minute charts if you want. I just find there tends to be more noise. But yeah, hopefully you found something useful in this ICT Killzones video. Please like and subscribe. Thank you for watching, and I'll see you on the next one.